The S&P 500 and the NASDAQ 100. We're going to talk about exactly what's happening here on the market. We need to talk about what happened today, because if we look here on the 4-hour time frame and we jump into the charts, guess what happened? You broke below your demand. You've invalidated this. And as we look right now, you are dropping, and it's looking highly probable that you will be testing and making new 52-week lows on the year, specifically on tech and NASDAQ. Now, over the past few days and weeks, I've voiced my concern of the downtrend, but the main thing I want to talk about is where we're going right now, what stocks I'm holding, what I'm looking at as far as options, because I am in one trade. I told everyone here yesterday also, so we're going to talk about that. Let's not waste any time. Let's get to it. Before we get into that, I have to ask you to do two things: like and subscribe. Every single day, I post videos for you so you know exactly what's going to happen as far as my viewpoint on the market, right? I try to be as unbiased as possible, so when you come here, you can know that if I show you where my money is at, I'm going to show you the gains, I'm going to show you the losses. Just look down in the comments. There's plenty of haters, and we love to talk and prove them wrong every single day. Just joking, but it does bring a little joy to my heart. So let's get back into this. Also, if you're not following on Twitter, I recommend doing so. Literally yesterday, day before, I posted a lot of these charts that we were looking at. We talked about Apple, talked about Meta, we talked about Microsoft, a lot of our big plays. And today, again, I told you yesterday what I was playing. The day before that also, Microsoft, so far about $2,100 on that. We're looking for more gains to come in. I started trimming already, but still looking good. Now, getting back to the NASDAQ, what are we liking here? If we look here at the 4-hour, again, I want to recommend this to everyone when you're charting, right? When you're looking at charts, start from the weekly, start from the 1 day, then go to the 4-hour, then slowly trickle down to, the lower time frame. So when we look here at the 4-hour time frame, is there a reason to be bullish, right? That's my biggest thing. I always play devil's advocate to any type of thesis that I have. So if I look at the market and I see here, right, what's the reason for me? If I come here and I'm bearish, what's the reason that I could possibly be wrong? Where is there a reason for us to be bullish? Well, if we look here, there's a few things, right? This is the NASDAQ. We're going to ES in a sec. Well, we were bouncing at demand, but bullet points to realize on the overall viewpoint, we're making continuous lower highs, lower high, lower high, lower high, lower high, again, right? It's continuous. And on top of that, we're making lower lows. So this means we're in a clear cut, no matter how you put it, downtrend. That's the fact of the matter. You can just see clearly in a downtrend on the 4-hour chart, basically since the beginning of December. Worth mentioning, we did make a little bit of a double top, but we'll get into that here in a sec. So that's where we're at right now. If we look at our supply levels, supply and demand, right? Supply was up here about 11.35. So as long as we're below that range, we have to say we're bearish. We're expecting downside, right? Every time we push up, we couldn't even make a higher high. So this just confirmed the thesis there. Now with the downside, what happened here? You had your demand, we've tested, and we eventually broke through. Now, the kicker here, the thing we need to be watching out for is S&P futures. Because I mentioned last week that we're still in this downtrend, worth mentioning. We are making a little bit lower highs here, then we broke that trend. But what I want to say here, or higher lows, sorry, is S&P is lagging against the NASDAQ, right? So tech is inherently more bearish. Surprise, surprise, right? So if we look here, this is our supply, this is our demand. In comparison, you can see NASDAQ, you're already down there, you're breaking through, you even validated it. S&P futures, you still have around 50 points to go, 60 points roughly. So I think S&P, the SPY, has downside. I think we're preparing to break this line, push down towards 37.50, and this is where I start to see a bounce potential or to get some relief or hopefully buyers step in the market there, right? So I always try to provide you both theses, right? Where do I expect buyers to show up and where do I expect sellers to ultimately push you down to? And to give you a better visual of what's happening here on the day, this is what the market looks like right now. Absolutely red. And when we come here, I want to make sure people understand I'm not doing anything to gloat. I always say this in all my videos, right? It's not to say I'm right, you're wrong, called it, right? I hate when people get cocky in this market or anything like that, because chances are when you get cocky, that's when you start to lose money and things start to go the opposite way. But what are the big reasons we're talking about? One, Apple. Now, if we go to Apple, I've been saying this for a while. And if you've been here on the channel, then you know. Right here, the 2020 to 2022 pennant, right? Higher lows being established here and here. Guess what? You broke below. Going back around, 2 weeks ago, we broke below this down to 136, and everyone will say, oh, we're going to bounce at 138, remember? And then we broke below. We flipped 134, and we're making new lows, 52-week lows, at least today. Now, everyone at this time, if you go back to Twitter, we were talking about it. Everyone was talking about going long. But what would happen if we broke that key level and long positions started getting liquidated, which was kind of my thesis if we broke below 134. Again, you can go back to Twitter, go look at those comments, go look at the views, everything like that. We posted it there, right? And we started to break down, and it's happening rapidly now. So the big question here is, how long could S&P hold up? So I do think we have a catalyst. We have reason for the S&P to really get its legs kicked from underneath it, because now we're really breaking down from all the big trends on the stocks that were holding us up. Apple is one of those names that was really holding us up. Now, if we look at the rest of it, let's look at Amazon. You're coming down to COVID lows. This is COVID lows, people, right here. That's COVID lows. You're about to touch it. We've been calling for this for a while too, around $80 roughly, right? Tesla, what's happening here? Big stocks, huge lows. We're coming back down, pre-COVID highs are right here. So maybe we're coming down to 65. Things are getting brutal, right? The list goes on and on and on. So right now, as I look at the market, I have to look at it and say, look, it looks like more pain's coming, right? I have to view it from that point. If I'm expecting any sort of bounce, I have to look at the 4-hour time frame, and I don't see a bounce unless we get back to 37.52 to 37.65. That's my demand zone. That's where I see buyers hopefully showing up to get any type of relief. But until then, I do expect downside in the market. I don't see the upside thesis right now. That's my opinion, what I'm looking at specifically here on the market. Okay, now looking at some key things to give us any type of insight into tomorrow and going forward, which I still think there's downside in tomorrow. Let's talk about VIX. Now, people keep telling me, Tyler, you can't chart VIX, and I agree. You shouldn't look at VIX from a standpoint of looking at an equity. I shouldn't look at a volatility index and think, oh, this is going to move similar to Apple or move similar to Microsoft, right? That doesn't make any logical sense. The VIX does not move like a stock because it is not a stock, right? That's why the VIX tends to just stay horizontal, right? Now, if we look here, there's a big bullet point or big level that we've continued to bounce from, right? This 20 to 18.5 region over and over. This is the past year going all the way back to last December. We come down, we bounce. We broke below roughly down to the 17, 16 range. We bounced, got back in that range, and then shot up. Every big inflection point on the market, specifically on SPY, has been dictated by this level on VIX. So I do think you need to keep an eye out on VIX. This would be one of the very few times that we did not get a spike up on VIX if it does not end up shooting back up to, $28, $30. I'm just saying, am I calling for that? No, but I think it's something you need to be watching out for just based on the pattern. Now, just giving you an overlay here, I want to show you on top of this, looking at it so you can see SPY as well. Look what happens every single time. Okay, so look, as we get in here real quick, let me go into full screen so you can see. Every time, look where the arrow is, VIX hits that level, boom, come down. This is the SPY going down. SPY is up high, comes that level inflection point, you come down. SPY goes back high, comes that inflection point, you come back down. SPY's at a high, hit that inflection point, you're going back down right now. Okay, so I can't give you a time frame of when this is going to happen. I'm just saying, looking at the key data points, it's worked so far, right? Just want to highlight that, throw that out there. Okay, there's proof in the pudding. That's what I like to say here, people. Don't try to change the system. If it's worked for a year, chances are, if it ain't broke, don't fix it, right? Next up, yields. This is one of my favorite parts, right? The US 10 versus the US 30. People get mad because I don't do full education classes here, and I know I'm like, oh, look, too bad, right? Wild. The US 10 versus the US 30. I want to highlight where you're at and how you're moving here. You're in a 2-year uptrend here. The 10-year inversion over the 30, right? We're at 98% inverted. We're not fully inverted. We've inverted a few times here on the year, but I do expect some volatility here, right, on the yields. Okay, I want to highlight that. You're already seeing the 10-year start to move back to the upside. You've seen a lot of upside movement here, but you also seen the 30-year move to the upside, right? I do need the 30-year. It's come to 4%, so I think it's going to stagnate here just a little bit, and I do think the 10-year will start playing catch-up, trying to invert it very soon. These are just bullet points that I'm watching, things I think you need to be watching out for. Going into TLT as well. What did we say here? Everyone was calling for, if we look at TLT, again, this is a daily chart. If we go down, you can see you're in a clear downtrend for almost a year. The same time when the market topped out, right? TLT just come crashing down. You broke out of this. Everyone's like, oh, hip, hip, hooray. We're going to the moon, right? What we knew based on option orders, based on what big money was doing, that they were all calling for downside movement on TLT, which is overall the health of the economy. That's the best way to view 20-year bonds TLT, right? View those as the health of the market. typically when the market starts to bottom out, when rates start to stagnate, right? Not cut yet. When rates cut, typically TLT starts to shoot up. But when they at least they stagnate, that's when you'll see TLT start to pop back up. But rates have not stopped yet. They have not. We have not pivoted, right? There's no pivot. And a pivot won't even be when the rates stop. A pivot will be when they start to cut rates. And they're not going to do that for a whole nother year. We need to understand that also. So again, TLT coming crashing down. These are all still really big signs for me that downside is still likely. DXY, not my favorite thing right now, but you are bouncing out of this key area that we mentioned, that we have highlighted here again. Was the only big level we've been interested in. The next level down here at 101, 102. But right now, DXY is getting love and it's pushing out of this. Surprise, surprise. I'm going to be looking for a 105 to 106 touch on DXY, possibly to follow up some of this downside potentially. Now, again, that's my viewpoint, broad market. What am I looking at right now? I think you have downside here on ES until you get into demand. If we look at NASDAQ, I don't think you have too much more. I don't think you have too much help all across the board. This is not a demand here. I'm just going to tell you that plain and simple. Going to a daily time frame, you really don't have any demands here. I'm going to tell you have no real established demand. Okay, so calling probably for 52s coming in hot. So I have 105 roughly as my next support. And then you also have about 106.5. That's it for me. So I think 106.5 highly likely overnight or into tomorrow. We'll be watching out NQ. ES should hit demand by that point also. So that's where I see you coming into demand here, specifically here on ES. But you can see you've came down, flipped that support, boom, shot back down. Here's really quick, go over some stocks that I'm liking, what I'm looking at. Now, again, my favorite play right now, I'm going to tell you over and over, it is Microsoft. Everyone keeps talking to me about gaps and what's happening here. And again, I don't just look at a chart and say, oh, there's a gap, let me trade it. No, that's not how you do it. It's a losing strategy. But what I'm looking for here is what's going to happen when you push back down. And I do think you will fill this gap down to around 228.5, 228.7. People can say, well, Tyler, the gap doesn't fill right there. If you go to the 5-minute or the 1-minute chart, Tyler, where did it end on that day? It's all the way right down here. You can zoom out a little bit more. You can see, let me just show you food for thought. Now, I want to highlight, I do not care about these small time frame gaps. So let me go to the 15 minutes so you can see a little bit better. You'll get the overall gist of what we're talking about here. Let me zoom out really quick. It's so far back, I really have to zoom out here. One sec. I'm just trying to show you all the way down here because this is where it closed on that day down here at 225. That is not what I care about. If you look at statistically which gaps fill the highest quality, highest percent time, it is down a daily time frame. So where's the top of this daily gap? It's right there, 228.7. That's where I'm targeting, down to 229, 228 roughly. I'm not going to be greedy once you start breaking down. But Microsoft, that's what I love. That's the play I'm looking at here, and that's ultimately where I am targeting this thing to go. Nothing besides that. The thing that's what you have to be watching for. That's what you're looking for here. Microsoft, I still have the downside. I think it's lagging behind Apple. And next up, I will say right now, there's basically two for my runners up. I love Meta. It's beginning to do it. I mentioned this on Twitter also. You had 3 rejections of this massive level. Again, you can go check Twitter to go see, go to media, go look really quick. You can see right here, I went over exactly why I recommend watching and looking at that. But if you come back in, you can see you're breaking out this pennant, trying to push down. Key level I would be watching, going to tell you right now, the 111 all the way down to 108 range. But if you can break past that, I'm going to tell you, if sellers really start getting aggressive here, I think you have to target the $97, $98 range. That's my big level. I think it's, I've been calling for a while. So maybe I'm like the boy who cried wolf. I don't know, but I love Meta. It's my second favorite play right now, other than Microsoft. I just think Microsoft hit its target sooner. That's why I like it. But Meta, obviously a lot of downside potential here. Next up, Nike. Guys, I'm telling you right now, I've been telling y'all for a few days, but it's happening now. Nike, when it breaks this low at 114, I think you're going to get just slammed. If you look at what's happening specifically with inflation and what's happening with these big companies, Nike specifically has a large amount of inventory right now. They've been saying quarter after quarter they're going to liquidate. However, no one's buying what they're trying to liquidate. This is an issue. This is why Nike will continue to do poorly. This is why they said quarter number 4 earnings will do worse compared to quarter number 3. Ask yourself, why would a company that primarily sells to retail will do worse during a holiday season than they will do the quarter before that? Illogical, stupid, no sense. Nike, in my opinion, clear short opportunity. I don't have a clear target here. I just think it looks brutal. I think it looks terrible. Maybe down to like 109, 110. A little bit further than that. But again, I just call them out, boys. I don't know what to say here. Daily demand or supply level here came in, instantly rejected. Rejected again. Again, love it so much. One of my favorite plays to the downside also here. Now, Honorable mentions. Again, this is tough to look at. Nvidia, brutal. Remember, we were talking about this for a while. Brutal. Brutal, brutal, brutal. Netflix, probably my next favorite play right now. I'm going to be brutally honest with you guys. If you look at this range about right here, about 278, 276, I believe personally, if you come in here to Netflix, I want to look at it on TradingView just because it's a little bit easier on the eyes. You can see my exact point. We'll go to about the 15 minutes so you can see here. Actually, we'll go to the 4 hour. Who cares, right? Go to the 4 hour. I'm going to bring up the VRVP so you can see. If you break below around the 271 region, I believe you're going to be pushing down towards 255, 256 in a hurry. I think it's one of the best opportunities out there. And really what you're looking for is this clear line break. And you're kind of already doing it, right? I don't even know if you really have to get below 271. I'm just saying you have a clear volume shelf, lots of illiquidity in this range. I think it's highly probable that you push down to 252, 254. I think you have to be watching this. Netflix was really strong as long as it held above 290. Guess what? That ship has sailed and you're pushing down a lot of weakness here. Sellers are out there and they are dominating in this market right now. If we look at what's happening, I think you have to just acknowledge this overall weakness in this economy right now. Okay. Again, people keep saying, Tyler, you're crying wolf. You're the big bear. Guys, y'all remember, I look at a market from a short-term and a long-term viewpoint. Short-term, I'm looking for the weak. Okay. I'm looking to give you guys the best setups, show you what I'm looking at, right? Give you guys some tools to help you along the way. It's not financial advice. You always need to do your own DD, do your own charts, make sure you're responsible for what you're doing. But I try to help you guys out as much as possible, answer questions, etc. Now, I do go over my long-term thesis also typically on the weekends for you, right? But I can't do that every single day or my videos are going to be 50 minutes long. So you have to understand and meet me kind of in the middle. If you're interested, just so everyone knows, the Discord link is down below. I recommend, if you're interested in Discord though, do not hop in for signals. That is not what we're here about, right? We're about 944 members currently right now, growing rapidly. But if you look at what's happening, the guys are killing it, right? Do I post trades that I'm doing? Do I post setups I like? Yes, right? I do. But I'm going to tell you, these guys, they're putting in work. They're learning every day. This is just today, people. They're shredding it out here, right? But they put in the work. So if you join, make sure you join with the mentality of I want to learn, not that I want to get rich quick, because that is not the mentality to have. If you want to get rich quick, do not join my Discord. Actually, you should probably just unfollow my channel because the goal here is to learn how to really do this thing, right? It's to learn how to trade, learn how to look at the market, learn what's happening with fundamentals, learn how to implement technicals also. That's the primary focus of the channel. I'll see you tomorrow. Have a good one.